So, how's everybody doing? This is Melvin on the Melvin Live Show here. Today it's episode 124, and I'd like to talk to you about this idea of accounting is the language of business. If you are watching and you have an impending pitch to the investor, then definitely this video is something that you want to pay attention to. Now, I'm speaking from my experience of having to raise funds and pitch in front of investor firm when I was a part of this earlystage.com. And so here's some of the things that I want to share with you in terms of my experience advising businesses as well as companies when it comes to fundraising, whether it's equity or debt. So when you think about the word accounts, what do you think of? Well, for most of us, the first thing that comes to our mind would be debit and credit, right? So, when you have a business, for example, and you think about accounts, you think about, the assets that they are in the one, one column is the assets and the other column is the liabilities, for example, right? So you think about debit and credit. I mean, if you like me, who had study accounts in college as well as university, you will understand what we mean by that. Now, another thing that comes to mind when we talk about accounts, especially in the business context, is that we when we use the word account, we are actually talking about a customer or a client. Like, oh, this is a very important account for me, right? What does that mean? That means that this company or this person is a very important client, either because it's a very big, high value client, or it's a client with a huge LTV, right? Now, at a personal level, when you think about account, you might be thinking about savings account and a checking account and an investment account. So an account can be different things, right? Or you can have different type of accounts. Like for example, I have an account which is just a transactional account, and I also have a savings account as well as an investment account. And so that kind of comes to mind. So what does it mean when we say that accounting is the language of business? Now, first thing first, let's dive into what does it mean by language of business. Now, when you talk about language of business, very fundamentally, at the end of the day, it's you want to be able to say that whatever that it's in my business, I'm able to either quantify it or represent it in a quantifiable terms. So, for example, you say that I have a an asset, and this asset is a machine, right? And so we would want to know how much does that machine cost, and what is the valuation of the machine? How old is the machine, and what is the depreciation on an annual basis, right? So that's something that can be accounted for. And so when you say that, well, we have lots of stuff, what does that mean? That means that when we look at your accounts, we would expect to see a list of costs relating to employment or relating to your staffing costs, right? When we say that, well, we have a good reputation, like for example, Coke, it's known as probably the world's most valuable brand, right? Nike, as another example, it's one of the most valuable brand in the world, arguably, right? Because you can create a T-shirt, like this, and it probably costs you 20, it probably costs you like $10, for example, right? How much can you sell it for? Without a brand, it's just $20, maybe, right? But if you slap the Nike swatch on this t-shirt itself, then what's going to happen is that you can probably sell it for like 60, 80, $90, which is, more than 10 times the amount that you manufacture it at. So the difference between that is that you have a brand, you have a goodwill. Now that goodwill must be able to be quantified, whether in a, whether it's using hard evidence or even in a projection, net present value kind of a sense. So everything when you talked about in business itself, it has to be quantifiable. In other words, you must be able to account for it. Now, so that's the first part about the language of business. Now, the second part about the language of business that you want to think about is actually something that is a little bit more profound. So, what we mean by that is that accounts, the way that you treat your account is a reflection of the mental model that you have about your business. Now, what exactly I mean by that? So, for the longest time, people have been saying things like this. They say about, well, people are our assets, and if that's what they say, then obviously, if you go to their books, right, you would expect to see under the asset column that there will be some term that is quantifiable or some term that is related to their people. And quite often, what do you see on the asset column? Well, you see things like buildings, fixtures, furnitures, machineries, motor vehicles, the whole list, right? But where do you find human? Where do you find employees? Where do you find people? Well, they are in the expense column. So when we say that people are our assets, but we treat labor costs as an expense, then it calls into question what exactly is our mental model when we say that. So while the way that accounting is being done, right, it has its own requirement. I mean, I'm not an accountant, but it has got its own requirement and stipulation that certain things have to be accounted for in such a way. But the truth of the matter is the following, right? At the end of the day, the company can be seen as making lots of money and yet still lose money. So, what I mean by that, recently I had the opportunity to work closely with a company that wants to be taken over by a new investor. And I'm actually very close to that investor himself. And so when the investor was looking at the company, he was asking me for opinion because when you look at the books of the existing company that he was supposed to take over, he was in fact not very comfortable because the way that he saw that the company was running, although the company was making a lot of money, but a lot of money was also going out. So herein lies the question, right? Is the company really making money, or are they, i.e., the owners, are they using the company as a personal ATM machine, right? So that's the other thing. And of course, another aspect of it is that perhaps the owners are above board. The owners are doing their level best to get to what they want to achieve. However, they may not be very familiar or good at running a business. And so as a result of that, they may have incurred too much expenses in terms of having too many salespeople or taking on too many projects and not being able to fulfill them, which then would bring about some ramifications, for example. And so when we look at the whole books itself, right? The books look good, right? The books look good, and it seems like it's making a healthy profit year on year. But when we look at the way that the company is it's being operated and being run, we find out that there are a lot of inefficiencies. So I always remember this thing where one of my friend who is a CFO, he actually told me this, and he said that at the end of the day, the numbers that we put in, sometimes it can be quite arbitrary, right? It can be fuzzy. But the moment that set of numbers go down onto the books, into the books, and get signed off, it becomes a fact. And so I'm not saying that there are companies who kind of cook the books, but what I'm saying here is that we sometimes think that the accounts is an actual representation of the company. However, that may not necessarily be so because there are so many other factors that you cannot see, and you may, if unless you're familiar with how businesses are run, you may not be able to see where are the inefficiencies and how are some of the things that you could do to bring it to a more optimal manner so that you can not only just do well in terms of profit and loss, but actually have cash in the bank at the end of the day. And so when we talked about accounting as a language of business, so the first thing is to be very clear that whatever you talked about in your business have to be quantifiable, right? Have to be quantifiable. Anything that you talked about in your business, it has to be quantifiable. If you are saying something and you are just alluding to it in terms of a hypothesis, then it will not be taken seriously. So if you're pitching to an investor, you want to be able to quantify everything that you're talking about in terms of your business. So that would include the assets, whether it's in the form of a physical asset or an intellectual property, right? You want to talk about your your brand, right? Recognition of your brand. That's another way to quantify that. You want to talk about the market share, right? Or the market size, for example, and how you intend to be able to obtain a certain percentage of the market share. What is your strategy? Now, that has to be accounted for as well, right? And then, of course, you have your suppliers or your customers, as well as your partners who are is going to help you make this whole business a reality. All that has to be accountable as well, right? Because you could be having a series of subcontractors, but you're paying them at a very high rate, or what is the market rate, and is that feasible, right? And so all these things have to be accounted for when you are doing a presentation to investors. All right. Now, so that's the first part. The second part is that when you think about accounting is a language of business, it also reflects your mental model about how you see a business. And so the better you are able to communicate and to be able to use terms that are quantifiable and to be able to present it to the investor itself, the better you're able to communicate that, the better it will be, and the higher chance that the investor will then be able to get a better sense of what is the potential of the company and why they should or should not consider investing in the company. So at the end of the day, when I when did so sometime later I met with the investor again, and I asked him. I said that, well, so at the end of the day, um, did you make an investment in a company? And he told me, yes, he did make an investment in a company, but he had a condition for the company. And one of the conditions for the owners is that he will, amongst other things, right, he would not assume any of the debt and any of the projects any of the projects from that day itself. He is not going to absorb any of those projects. In other words, he wants to take over the business, the network itself, but he's not willing to be um, held hostage by the previous contracts that they have gone into, because you were saying that there is a huge possibility that they are not going to be able to deliver on their projects on time, and that's going to be a huge libel case, right? And so those are some of the things that he is not willing to accept itself. And so, my friend, at the end of the day, we as a business owner, we as entrepreneurs, we must be able to quantify whatever we are talking about. So, how does it look like for people like us who are running a 1 person, 1 million all digital business? Well, at the end of the day, remember everything that you do has to be accounted for. So every single activity that you do has to be accounted for. How is it going to contribute to your bottom line, right? Obviously, it may not be directly linked to your bottom line, but how is it going to contribute, whether directly or indirectly, to the bottom line? That has to be taken into account. So let me ask you here, what are your list of results that you would want to achieve this coming week? And how can you account for that? And with that question, I'm going to leave you to ponder over. Have a good night here in Singapore. It's Sunday night. And I hope this has been helpful. If you found this video to be helpful, give me a thumbs up, like it. And if you're on YouTube, make sure you subscribe if you want more videos like this where I teach you the mental model, the skill sets of running a 1 person, 1 million all digital business, right? If you want more videos like that, then make sure you subscribe on YouTube and like me on the Facebook. And with that, I'm going to take off and I'll see you guys on the next one. Bye-bye.